trade war. Yes, Donald Trump says it is essentially to protect domestic business, but the question is he perhaps harming it further in the quest to do so? Let's discuss that and more with Seth Freeman. He's a senior managing director with GlassRatner Advisory and Capital Group. Seth, hi. Good morning from us and good evening to you. We have had Donald Trump target an array of products, an array of goods. The latest seems to be, of course, technology and even for that matter, Chinese investments. With, the tit-for-tat trade war only seeming to be escalating, do you believe that there could be any sort of white flags that may be raised from either sides at this point of time? Or do you think that we are too far into this trade war for any sides to essentially come to any suitable compromise?
Well, I think it's like any kind of fight, whether it's litigation or people hitting each other. I think there has to be a little suffering, I think, before the parties will come to the table.
With companies, of course, being one of the key victims, consumers as well, of course, but companies as well have been victimized on account of this tit-for-tat trade war. We have just had Harley-Davidson essentially shifting production overseas due to this trade war. So do you believe this is a strategy that companies will adopt, ship up or ship out? Do you believe that the companies would react in this manner, essentially moving out production, thus essentially backfiring Donald Trump's whole idea of putting up these tariffs and trade barriers?
I think companies, U.S. companies that are facing very tough competition are going to really have to look at their location of doing business now because of tax rules and these the trade war or trade tariffs. It's particularly interesting and politically charged, of course, that Harley-Davidson is making this announcement, because this was held up as such an American company that, that it's facing tariffs or, costs of higher goods on its own. And now it is one of the first ones to make this announcement that they're relocating in order to save on the president's new tariffs.
Okay. In the midst of all of this, do you expect U.S. economic growth? It has been pretty good. There's been a decent rebound that has come by of late. The Fed as well noted the same. So do you believe that this sort of hard stance could perhaps put a pause on economic growth on a temporary or on a permanent basis?
I really think it can, because if it has the effect of raising consumer prices, and our consumer economy is so important here, that could really reduce consumption and especially discretionary purchases. In some of the high tax states, we're already looking, actually in California, for example, and in New York, we're actually looking at tax increases. So if we have tax increases and higher consumer prices, ultimately that's not good. We are getting mixed signals out of Washington. They're talking earlier or last week, rather, it was 5% growth, which was really incredible. That's, emerging markets level growth, to Peter Navarro talking about 4% today. It would be important, or it is important for the government to give us consistent numbers. Otherwise, I'm very concerned that's going to turn into really a negative market sentiment. And that could really start a major downturn also in the market.
All right. While this war seems to be among the bigger boys, we're talking about US, Europe, and of course China as well. How do you see an impact on emerging markets? We have seen growth in various pockets of emerging markets as well slow down a bit. We have Brazil facing its problems in relation to the currency. India as well, of course, while the growth has just come back in the latest quarter. Do you believe that, EMs as well could be victims of this global trade war? If you could just explain what your own worries could be on how EMs could essentially turn out to be the collateral damages, if you may say so, because we anyway have seen a significant reduction in capital inflows from abroad.
Yes, money flows will probably slow down. coming into emerging markets and India in particular, because at least on the debt side, because debt investing is going to be less attractive with U.S. rates going up. And in terms of equities and other investments that are marked to the U.S. dollar, when we see currency translations causing a loss, that's sort of a double whammy. On the other hand, India is going to be enjoying very high growth rates for quite a long time, in relative terms, for a long time. And all of this negative noise about China may really make many foreign firms look more closely at India, especially U.S. firms.
Well, all right. Here's hoping that all the nations involved could come up with a bit of an amicable solution. But Seth, thanks so much for joining us and breaking down this trade war that only seems to be escalating. And of course, at this point of time, nobody seems to be understanding what exactly the White House's rhetoric is. It's just a wait and watch approach. And in Donald Trump's case, it's more like a wait and watch his Twitter feed approach that I guess everybody seems to be following.